Why is 2020 the year? We've heard about streaming for some time now. It's coming, it's coming, it's coming. You think this is the year?
This is the year everybody launches. So Disney Plus launched, well, late 2019, but it was an amazing launch.
Yeah.
They had 10 million subscribers the first day. And
way past the estimates.
Way past. I mean, they've been talking about, well, they said 60 to 90 million subs in 5 years, of which 30% would be in the U.S. I mean, they're obviously going to blow past their forecast, not even a question. But then we have Peacock, which is owned by Comcast, or NBC Universal, parent company Comcast, launching, phased launch April, and then bigger push behind the Olympics. HBO Max is launching. So that's just all the traditional media companies have to get in the game. Discovery is launched also in a very different way, but every media company has got to be in streaming. This is the new distribution system.
Is this an offensive move or a defensive move? I mean, do they see a lot of money out there to be made, or are they saying we have to get there because otherwise we lose our base?
It's both. I mean, it clearly it was defensive, and everybody sort of held back, but it takes a long time to have the technology, and there's a lot of content. It's not just library content that's going in, but original to keep people on. And, each strategy is a little bit different, but the traditional media companies are competing with the FANG companies who have not unlimited funds, but humongous balance sheets.
So can we talk a bit about those funds? Because if one looks at what Netflix has been doing, it's $3 billion spend, the free cash flow burn rate is pretty high. The market's sort of hoping that it settles down to only $2.5 billion next year. The cost of entry is huge. You have both content and the technology. So how does this become profitable for a lot of these businesses?
The traditional media companies have given a path to profitability, and they are different. Netflix is spending $17 billion in cash on content this year.
Amazing.
And the burn is, as you said, the free cash flow, it's negative more than $3 billion. Sure. So and that would not be accepted for traditional media investors. Having said that, there are advantages that the traditional media companies have. They have brands. They have content that they already produce. In any case, they have deep libraries. And maybe most important, they have humongous platforms to promote from. So think about Peacock's launch. They will launch initially in April, and with all of Comcast's properties, and it's theme parks, films. There are a lot of touch points, cable networks. And then when they really fully launch, it will be behind the Olympics. 250 million people in the U.S. watch the Olympics. That's an unparalleled platform. When Disney launched, 96% of the U.S. was aware of the service launching.
So is this going to be a game where scale will win out, and as you point out, the ability to cross-market, et cetera? And so if one were an investor, maybe you think not as much disruption as one might have imagined, and the big names, the historic names, the NBC, Universals, the Disneys have a real shot at holding on and not being disintermediated.
They sort of have been already, and they're fighting back. We're going through this transition period, and the stocks reflect. In my entire career, decades, I've never seen multiples this low for media. So the stocks reflect the worst, and now they're coming back. So it's defensive, but it's also offensive. And it's really interesting. Peacock had an analyst event recently, and it's a different strategy than Disney. Disney is sort of family and kids and amazing titles. Boys with Marvel. You know what you know exactly what Nat Geo. So you know what you're getting. NBCU or Peacock will have news and sports and all of their library and original content, but they're also curating stuff differently. So it's they're curating channels, and they have a lot of comedy.
So here's my question. Yeah. Not about the stock market. It's like a golden age for the viewer. There's huge amounts of stuff being produced from lots of sources, really high quality, seems to me as an amateur, really high production values. Is it economic to produce as much new content, as many new series, as many new films as are being produced right now? Or are we in a situation like when a lot of new airlines crowd into a route where sooner or later it shakes out and the amount of capacity comes down? Is this a golden age that we're going to remember as being special in the amount of content that's being produced, or is this the new normal?
There has to be a shakeout. There is no way you can have 500 plus original episodic shows, and there's just no time for everyone to watch. And viewers are watching YouTube as well. I mean, there's just so many options right now. So there has to be a shakeout. So it's interesting to see everybody's different approaches, different revenue drivers. Some is subscription, some is advertising. In the case of Discovery, there's a big piece of e-commerce as well. But there's no question that they can't all survive.
With all this new competition, is the price for standard properties, a half-an-hour news show at 6:30 in the afternoon, the World Series, the Masters, the NFL, are the prices for those things coming down just because there's so much more stuff, or are the prices going up because they're flagships that will bring everything else in?
I mean, the cost of sports, we're all waiting for the NFL to be renewed. There is no way that's going down. There will be a lot of competition. Our view is that it will stay on broadcast TV because of the reach and the production capability. But the digital rights, there's going to be a battle.
But there's a real bifurcation between live sports on the one hand that is much more resistant to some of the forces we've seen as opposed to filmed entertainment.
Absolutely.
So the sports rights go up, as you said, NFL, NBA, Major League Baseball, things like that.
The sports rights are not going down.
Yeah.
You know, they're just not.
Can I ask a question? Is this going to go global? We've been thinking about this mainly in the U.S., but there are billions of viewers around the world.
Disney,
how do we think about it?
It's absolutely global. Disney is a global brand.
Right.
They're well-known, well-loved global brands, and all of their properties, whether it's Marvel or Pixar or Disney, or I don't think Lucas is Star Wars. I mean, those are Nat Geo. These are really well-known properties. They'll start to roll out at the end of March in Western Europe and around the world within the next 1 to 2 years. Peacock has not said they will, but we believe they will because Comcast owns Sky, and Sky is already a very strong television presence and broadband in the UK, Germany, and Italy. No question in our mind that they will go global.
So does this end up with 5 global brands fighting out? Maybe not too dissimilar from what happened with airlines, where you end up having a small number of global brands that really dominate.
There will be there will be probably a handful of companies. But we also think that the bundle will be reassembled. So in Disney's bundle is Disney Plus, Hulu, and ESPN Plus. And in our view, in Peacock, we'll see other companies coming in with their content. So it will be a different kind of bundle, but it's going to be so confusing for consumers.
Jessica, when do geopolitics figure in? We saw this with China, for example, with films, where they really started to take a role in what you could put in the film, what they'd accept in China. India has its own interests, things like that. Is it really going to be global in that sense? How much influence will governments actually have over what they'll allow into their consumer space?
There is actually already, there's a certain amount of local production that has to be done. So you see Netflix starting up local facilities. Most of the traditional media companies already have that. They sell all over the world, and many of them have, because that's what people want to see. You do have format rights, and you want to see something in your own language with your own nuances.
So how many companies do we end up with? 5?
4? Likely there are probably 5 major companies. The issue for traditional media is that what drives Amazon or Netflix is very different than what would drive Disney or Comcast or Discovery or Viacom, CBS.
Don't you find it fascinating that you're getting all these things now converging, where you've got tech-driven companies, traditional content media companies, all now starting to sort of fight in the same pool? It's a fascinating development.
It's amazing, and let's see what happens to valuations, because I think traditional media companies would just love to have the FANG type of valuation.
Jessica, I'm going to put you on the spot. One major player who's a major brand name player today, who's not going to be a substantial factor 5 or 10 years from now. If you had to pick one, who would it be? And if you had to pick one,
that's on the spot.
If you had to pick one who's going to be much bigger 5 to 10 years from now, who would you bet? Who would you bet most on, and who would you bet most against?
I think that we'd absolutely bet most on Disney and Comcast. And betting against, there are some of these companies I don't cover, so I'm going to stay away from that one.
I'll take up the hook. Some we're going to have to team up. Some of them are not big enough to make it on their own.
I think that there's going to have to, they'll have
Disney
to scale
could,
matters.
Maybe a Comcast could, but the others, they're going to have to get together.
Scale matters. We will see more in M&A.
But you also think that the scale matters, but the full vertical integration, the ability to do the content and all production values and the distribution and the cross-sell and the marketing, that does really suggest something that's really a completely integrated package.
Yeah.
If you listen to the politicians, they're all talking about strengthened antitrust, more competition policy, disallowing mergers. and you're talking about combinations to avoid redundancy. How do you think that's going to shake out?
But just think of the competition. How do you define the market? I mean, this is the issue. There are so many different players. There's never been so much TV production, and it's across a large swath of companies. And how do you exclude Netflix and Amazon? And Apple is in the business.
And consolidation certainly isn't hurting the suppliers, the writer-producers, the actors, the below-the-line. They're making more and more money.
Making more money. If they're not employed right now, I'd change careers.
Exactly.
So it sounds like you'd be a strong advocate of the AT&T Time Warner merger, and mergers of that kind is good things.
I think it depends. I wouldn't say any one combination, but it really depends. My greatest, I really wish that Comcast would have been allowed to buy Time Warner Cable. I think that would have been an amazing company, and they compete with national providers, but it wasn't allowed. So it's a very company-specific or situation-specific dependent on how we would come out on that.
So as we think about this globally, is it going to be possible to have what I would describe as regional champions, 4 or 5 big global brands, and then something huge in India, something huge maybe in Western Europe, something huge in Brazil?
It's a great point, because Star TV, which used to be owned by Fox and is now owned by Disney, if you were in India, you'd think that was a local media company. They have a 40% share, because it is local in that country, but it's owned 100% by Disney.